Welcome to the Daily Stock Review. We're going to go over Norfolk Southern Corp today. The goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. It's roughly 3 a day. Sound good? Subscribe to come along for the journey. Who am I? I'm an individual investor on the journey. 2,500 hours in over the last 7 years. I'm sharing the lessons along the way. Here's my investing process. I'll give you a heads up how I came across this stock in the 5-minute check we're going to do today to see if it meets that initial criteria. I learned from these guys. They did pretty well for themselves and they've left some pretty good breadcrumbs behind, so we should be able to follow in their footsteps. If you want the free resources that I wish I had when I first started out, I've created those. They're in a link in the description below, so you can check those out. Let's jump straight into it. So Norfolk Southern Corp, what I'm looking for at this stage is to jump into their annual report. So all I've done is typed in Norfolk Southern annual report, got their investor page, and I've already cracked open the latest annual report, which is 2025. Man, that's America. So I think the only thing that's missing from this is an eagle, maybe just in the background, but it does look pretty aspirational. All right, not gonna lie. Now, how did I come across this business? So yesterday I was looking at some other railway businesses that do freight around the United States and Canada, and I just pretty much typed in what are their competitors. It can be as simple as that in Google, and then having a look around at these businesses that have come up as well. So my investing process, really I want to have a look at these financial statements because it cuts through the noise. And what I'm looking for is anything that's out of the ordinary that would be interesting. Maybe other shareholders and other potential investors haven't came across it and taken note of it. Or is there significant growth in the business which is going to meet that 100x potential? So pretty much from this, what I want to see is has they mastered its customer? So either consistent or growing revenues. And then I want to see, does it have a moat? You can tell if it has a moat within the business because the margins that it's making for every dollar it spends or it's gets from revenues or in sales, should be getting a lot of dollars back. If something was making 1% margin, so for every $100 that it made versus what it got, and that probably wouldn't be, usually is not a very good business to have a look at. There are exceptions, however, and that's what we're kind of looking for today. All right, so what can I see here? Revenues. Very, very consistent year on year. So total railway operating expenses, 9.38, 7.8. So I can see that their cost base is decreasing, which is great. So let's just have a quick look to see what is going on. All right, so it's got $1.1 billion, and it's from this Eastern Ohio incident. And then we get into recent times. So that's actually come out as payment for those. And then, yeah, it's actually a cost back here. Or the reverse, sorry. Because we're looking at expenses. So that's come back into the business. So that's interesting. What about the other ones in here? So is there anything crazy that's happened to reduce costs? So fuel, I guess the cost of fuel has potentially gone down over that 3-year period. That might be with long-term contracts they've got in place. If these guys are running majority diesel locos, that's I guess a significant cost to the business. What it's done this year, though, with the war in Iran and the impact that's had to world oil supply, could be questionable. Now, depreciation, amortization, things like that. What else we got? Net income at the end of the day. So net income has increased a bit. And we've got to remember, though, that during these years, it has been depressed because of this Eastern Ohio incident. All right, let's have a look at the balance sheet. So we just want to see if there's anything interesting here, and it helps us have a better picture for when we're looking at the cash flow statement as well. Just paints the full picture. So we've got cash equivalents. It has decreased a little bit. We've got investments, properties, less accumulated depreciation of $14 billion and $13 billion respectively. So they've got 35 to 36 billion. They got current liabilities. They got long-term debt. And that long-term debt, total assets minus total liabilities is positive, which is good. And long-term debt appears at this stage to be small. So let's keep going. So we've got our net income comes out. We actually want to see what's the cash that this business has got at the end of the day after taking out and adjusting for these non-cash charges. So we end up with 3, 4, and 4.3. So net cash from operating activities has increased, as we'd expect with those other costs coming out. Our property additions, we've got 2.3, 2.3, and then 2.2. Now, what have we actually seen? So the business's asset base hasn't really grown out. It's grown out a little bit, but a lot of this will be in maintenance costs as well, not just, adding to their existing. Digging into these numbers in the notes to financial statements, we'll be able to help sort that out. We've got acquisition of assets of CSR. So back in the previous year, they bought or had a acquisition of $1.6 billion, property sales, etc. Now, where's the rest of the money they made? So by the time they grab that, they subtract that, they're left with still around $2 billion. So they've got dividends, purchase and retirement of common stock. So buying some of their own shares, and then debt payments. So really they're just selling some debt and then paying some debt off. So all they're doing is just keeping it balanced there in terms of what debt they've got outstanding. And that's it pretty much. So there's nothing in here that jumps out at me that's saying that this stock is not seen by the market and hidden, and we're going to have a huge growth opportunity. The increase in net income is one potential for that, though. So it has effectively doubled. The free cash flow has increased a bit because we're not expecting these property additions to increase rapidly. And so what would that mean for the share price? Well, let's have a look at it. What's it done over the last 5 years? It's effectively remained pretty flat. And considering the revenues in the business have stayed very flat, kind of expect that. But with that incident that occurred a couple of years back, it would have been a negative sentiment around it because that business is obviously just lowered its cash flow for that year as well. And then it's kind of been rewarded in the market by that as well in pretty much the last 6 to 12 months. And do I think this business is going to be a huge growth mover? Nope. So it's not the business that I'm kind of looking at the moment. Does it make reasonable margins? I'd probably say yeah. Like net income, 2.8 to 12 million outlay. That's pretty good. It's 20% at the end of the day, which is nothing to laugh at. It's just this business isn't going to have a significant growth pattern. Now, the only other options are if there is some significant negative sentiment around the stock, it may present a buying opportunity because this business appears to be quite well run. It's very consistent and it is a boring business. So it will, if you're keeping an eye on it over a period of many years, it may provide sufficient times where you can buy it lower than its value and then buy it or sell when it's significantly overpriced. All right, that is a takedown of Norfolk Southern Corp. If you like this teardown, feel free to subscribe. If you've got any questions, comments, and things like that, feel free to add them below. I'll be reviewing them in future videos. And otherwise, check out this next video because YouTube reckons you'll like it. Cheers.